Ergo is the next generation of Bitcoin. Ergo is Bitcoin 2.0, and there's a ton of reasons why this is true. Ergo not only parallels to what Bitcoin started in the crypto industry, but it has taken Bitcoin's lessons, Ethereum's lessons, Cardano's lessons, every lesson from every blockchain to come into existence and really implemented a lot of the things that blockchains have done right and done wrong into this new blockchain. Ergo is much like Bitcoin in the fact that it is for the retail investor. It is a decentralized, fair, P2P cryptocurrency project where people can transact via contractual money. They can also use DeFi, they can lend, they can use DEXs, they can do all these things. So it's taken this idea that Bitcoin has the core principles and the core fundamentals of what a crypto should do, what it should be for, and who it should be used for. It's taken those and advanced it into the smart contract era in an efficient and proven way that a lot of other chains have done before it in a package that is very, very unique. So right here, we got the Ergo website. We also have on the side here, we have my notes on what we're talking about today to make it a little bit easier for you to follow along, all right? Ergo is a third generation blockchain. It is just like Bitcoin in the fact that you can mine it via proof of work, and it actually uses the EUTXO ledger-based model, which is very, very, very close to Bitcoin's UTXO based ledger model. Just add smart contracts. That's what the E is for, right? Ergo does take a little bit of its own creative direction in the fact that it uses ASIC resistant mining hardware, mining software, in the fact that you only can mine this project with a GPU. So they don't want big ASICs being involved in the ecosystem. I personally think that's a good idea. Some other people will disagree and some other communities will disagree. But I think it's interesting that, we've seen what's happened with Bitcoin and these huge ASIC mining farms that are becoming so powerful. I like Ergo's different approach in trying to use GPU mining only based on the things that we've seen happen with Bitcoin and other mineable cryptos where ASICs get involved and big companies get involved in big mining farms, and it becomes a pay-to-play process. I guess GPUs are still pay-to-play, but the fact that you can't buy this really awesome ASIC miner to do a ton of work is something I think is beneficial long term. So very, very close parallels to Bitcoin, taking it into the third generation and adding smart contracts. Ergo is what Bitcoin would be if it had efficient and smart contracts, and therefore efficient and smart DeFi on top of Bitcoin's layer one. What makes Ergo so unique is not only this stuff, right? But it is what is developed in the tech stack underneath the L1 inside of the code base and what developers can do on this chain. So we see a lot of things where Ethereum's building these ZK rollup solutions via L2s, or platforms like Cardano are going to be doing input endorsers and Hydra and other things to scale their blockchain. We're seeing a lot of interesting things with ZK Tech and with ways to make blockchains lighter. Ergo has its own version of these things, and I want to tell you every single one of these things in this video so you can fully understand what I'm talking about when I mean Ergo is what Bitcoin would be if it was, created in 2024 here today. So some of the awesome things that Ergo has going for it, first off, where it really parallels with Bitcoin, is Ergo is for the retail investor. This is so important. I see a lot of cryptos that, have a lot of VC backing or have nodes where not anyone can run it or all these different things. And as a retail investor, I definitely think you should invest in projects where it is for the retail investor. You might not make as much money as the VC backed coins, but there's something about investing in these types of things that is more secure, better for you and your health and your mental ability in this crypto space and in this investing space. And I think it's just better long term, a long term hold, right? So Bitcoin, I would say, is for the retail investor. It has a lot of tokens really for the public. And in inception, it was only for the public. Ergo is the same way. While not all the tokens are out because they're being mined, 95% of all ERG is going to the public. Only about 5% is going to the Ergo Foundation. You can see it right here. 95.57 public allocation to retail investors and miners, basically selling to retail investors. So Ergo Foundation is for the people. About 4.43% is going to the Ergo Foundation for core development. But this is right in line with what Bitcoin says. It's all about the fundamental ideas and the commitment to the crypto principles. From there, Ergo also has some amazing thing in its tech stack. Sigma protocols, it's like ZK proofs on Ergo, natively integrated into the blockchain for developers to use. So there's different ways where you can use these Schnorr proofs to say, I know the answer without knowing the answer. The famous correlation that they use to this is you hide your iPhone, you unlock it, and you show it to someone. they know that you know the passcode without them knowing the passcode. This is natively integrated into Ergo. From there, they also have NepoPows. It's basically a way to compress the blockchain into a very small light client and scale it. This can be very useful for things like side chains, or just blockchain scaling, whether you want to have the Ergo blockchain on your phone via NepoPow, or you want to have a side chain that can then relay the whole blockchain from one transaction back to another and verify that the whole blockchain chain exists, right? So NepoPow is basically a light client to compress the blockchain and make it easier to scale. After that, we have storage rent. Storage rent is like, you consider it a fee for storing your data on Ergo. So when you do transactions on UTXO-based blockchains like Ergo, Cardano, Bitcoin, you open these transaction boxes, these little UTXO boxes, and it's like paying with cash. You pay with $5 and you get $1 back or something like that. But these boxes are left open. And what Ergo says is, if you're going to leave your boxes open for, I think it's 4 years, every 4 years, we're going to charge you a 0.1, or like a very, very small ERG fee. So storage rent is essentially a way to say, if you're not transacting on the blockchain to close your old UTXOs, you're going to pay a small fee every 4 years to keep those blocks open. I like this idea. I like storage rent. I like being able to charge people for the data that they're holding on the blockchain, because blockchain data can be expensive, especially in these early stages. I'm sure in 10 or 20 years, we'll have different ways and different, more efficient ways to store on the blockchain. But storage rent is basically a way to charge people for what they're doing on the chain, especially if they're holding like 10,000 ERG in a wallet that has open UTXO boxes from those transactions, and they're just sitting there not really contributing to the miners. Also, you know how when you're on an exchange like a Coinbase or like a Bitcoin exchange or a Cardano exchange, and you're trying to move funds away or trying to do transactions, and you have like 0.04 ADA left over or 0.04 Bitcoin left over in that wallet that you can't get off the exchange. Well, storage rent is another way to collect this dust by charging these fees. And so it'll collect this dust over time and keep the supply of ERG circulating for miners to collect and use and get paid for their work, and then keep the circulating supply intact so people can actually use it as contractual money. So I really like storage rent, something that some people disagree with, but I think it's a novel thing for crypto to put into its ecosystem. The next two things are really interesting. Chain cash is going to be like these on-chain notes. You can think of this as kind of like a treasury bond, I think. The way that I think about it's like a treasury bond, but it's on-chain notes backed by gold and trust. So basically you can think of like owning gold, creating a note on the blockchain saying that, hey, I own this much gold and I want to have this note and I want to sell it to someone kind of like as a credit debit position. Then on the blockchain in chain cash, people can sign a signature, a blockchain signature, to say, I trust that this note is good based on who this person is and what this gold represents and what this note represents. The more signatures you kind of can gather, the more people that sign the note and that verify the note and trust the note, you build trust. And as you build trust and have gold backing the note is worth more to someone. So like you can take a note and sell it to someone and say, hey, I've got 1,000 bars of gold and I want to do this. And you give them the note, the ability to cash in the note at any time, and they give you the cash or whatever that you want from them. So it's kind of a way to do like this velocity of money that we have in like the United States and Europe and other things with the credit and debit system. We're able to use money faster because of things like treasury notes or treasury bonds. And that's what Chain Cash is trying to do. Let's is the same thing basically, but it's like building a credit card system or a credit system within a small community. There's been examples of people doing this in like small towns of like 200 people, like in Montana or like Wisconsin, way up north, like in very secluded places back in like the early 1900s. They build these lets, and it's a way to say like, I have money and I want to get some money and I want to use credit, and it's basically a way to use credit before credit cards were invented. So that's two really awesome things that you can do on Ergo that people are really excited about because of its ability to increase the velocity of money on Ergo and let people take credit positions and debit positions and treasury notes, right? And use that in the chain, and then in real life to use the money in an appropriate way. There's a lot of things you could think about. They could buy a lot of NFTs. They could build projects on Ergo, like lending protocols and DEXs. They could build out more core infrastructure and have that debt owned to someone else at any time. So a lot of interesting things you can do from that. Lastly, probably the biggest thing everyone in Ergo knows is the Rosen bridge. It's one of the biggest technological achievements in bridges in crypto currently, because all of the security is held on the Ergo side and all the smart contracts are held on the Ergo side. It's a very, very interesting concept where guardians and watchers are protecting from the Ergo side, and then Ergo's Rosen bridge can basically connect to any chain in crypto because all the security is held on the Ergo side. While Ergo is security focused, decentralized focused, it can port to any chain. Currently, it's ported to Cardano. I would like to see them port to like Ethereum or Binance or other things that have a lot of volume and a lot of people that want to interact with it. But Rosen Bridge is a very, very, very secure bridge that is really innovating the way that bridges can be done, with all the security being held on the Ergo side and having multiple layers of watchers and guardians to verify what's happening. Okay. That's pretty much all the tech that Ergo has going for it. And all that right there just makes me really excited about the blockchain. You don't see like a lot of this tech integrated from day one. I know on Cardano, we've had to do multiple hard forks and multiple upgrades to get more tech out, which is okay. It's okay to do that. Same thing with Bitcoin. They've been trying to get like layer twos on Bitcoin forever. I just don't think it's going to be possible, right? Ethereum's had a lot of upgrades, but Ergo is taking all those lessons and bringing them into the chain from day one. It's really, really exciting to see it happen like this. So when you compare Ergo to something like a Bitcoin, an Ethereum, a Cardano, right? Bitcoin doesn't have DeFi. It's never going to have DeFi. And that's not really a downfall. It's just like it limits the way that people can use the money. It kind of changes it away from more like contractual money into the more of that store of value, because when you're using contractual money, you want a way to kind of, some people are going to want ways to leverage that money or use that money to buy other things on chain or use that money in multiple different ways. And so Bitcoin is a money in a lot of senses, where it's used in a lot of other ecosystem on their DEXs. Bitcoin's never going to have a DeFi ecosystem. The chain just can't handle it. So that's where Ergo is really different. Besides that, it's very, very similar, Bitcoin and Ergo, because of their core fundamentals and the base core technology of the UTXOs and the proof of work and all those things, right? Cardano, very similar to Ergo, just different in a little bit of ways. Cardano strays a little bit away from that Bitcoin principle by using the proof of stake, although Ouroboros holds Bitcoin's proof of work native security proofs, right? But Cardano's a little bit different. It really innovated proof of stake, and it has its governance going on right now. So a little bit different, but still really similar to Ergo. And then Ethereum is just very, very different. Ethereum is very large and very mature ecosystem, but it has a totally different thing. It's moved from proof of work to proof of stake. It's accounts based, and it's just more about the L2 scaling version. I think Ergo is much more like Cardano, where it's not really trying to go that L2 route right now, and it's using UTXO, so it doesn't really have to go the L2 route. Lastly, you want to know about what is going on in an ecosystem when you're joining. So one of my favorite things to do in crypto, like especially this past year in this last bear market leading into the bull market, what really interests me as a solid strategy that I've seen work over and over again in the past couple of bull runs, especially in 2021, 2020, right, is you find an L1 that you really love. We've seen it in Ethereum, we've seen it in Cardano, we've seen it in all these other ones, Binance Smart Chain, AVAX, Algorand, other things like that. Find an L1 that you really love. For me, I really love Ergo. I love Alephium, I love Cardano, I love Bitcoin, I love Ethereum. So find an L1 that you love, right? You love the fundamentals, you love the ideas, you think it's a good project that's going to grow, right? Doesn't have to get to a billion market cap or 10 billion market cap. It doesn't have to do all these crazy numbers, but just find something that you love. Then on top of it, find the top decentralized exchange and find the top lending protocol and invest in those things. I currently do that on a couple chains, and I think it is one of the best ways to leverage your money. If the L1 grows in the way that you think it's going to grow and does what you think it's going to do, the top decentralized exchange and the top lending protocol are going to be some of the best investments that you can do on chain, especially for a proper DeFi ecosystem. Some L1s, you won't be able to do this because they don't have a DeFi ecosystem like XRP or like Caspa. But if you're in these DeFi ecosystems, look at the ecosystem. Ergo's ecosystem is growing. It's very, very mature, very, very quickly. And I think it will do very, very well in this bull run as Ergo itself grows. And so some of the ecosystem projects you want to know about are Spectrum Finance. This is our DEX. It's also a DEX on Cardano. So it's a cross-chain DEX. Really interesting to look at. Duck Pools, lending protocol, lending and borrowing on Ergo. So these are the two main projects, DEX lending protocol, that I would take a look at if you are interested in this chain. From there, Ergo also has things like DEXI Gold, gold peg stablecoin based on an Oracle price feed of gold. It also has a Sigma USD stablecoin, which is over collateralized. If you are like if you're in Cardano, of Jed. Sigma USD was kind of like the premise for what Jed became. So Sigma USD is over collateralized. It's anywhere from 400% to 800% over collateralized at any time. Very, very similar to Jed. So just think of it like a stablecoin that has a lot of over collateralization. Ergo also has a NFT marketplace in Sky Harbor. We can pull that up for you. Sky Harbor. And, it's just like all other standard NFT marketplaces. There's a lot of NFTs going on here. And it's, the ecosystem's growing. There's not crazy huge like Ethereum based PFP collections yet, but I would not be surprised to see stuff like that happening soon. So we have NFT marketplaces, we have DEXs, we have lending protocols, we have all of this stuff. And then we also have a mixer like on Ethereum where you can mix your tokens and kind of have more privacy. Ergo has Ergo Mixer, which is right over here. Ergo Mixer, which is a privacy-focused token mixing protocol if you're interested in privacy. So Ergo does have native privacy into the layer 1. A lot of ways that developers can use privacy-based or it's like secure secret addresses and stuff like that, so people cannot track things if that's something of interest to core developers. Not only is the Ergo ecosystem growing just on its own accord, it has gotten recognition for people in other places. If you go in Twitter and type in Charles Hoskinson Ergo, you can see countless examples of where other people are praising Ergo's success. Charles thinks Ergo is the spiritual successor to Bitcoin itself. And so there's a lot of proof in here about why Ergo is doing some great technological things. There's a lot of videos that you can watch where Charles is talking about, what is happening on Ergo and why it's important, right? And so just something to look at if you're interested in new L1s and L1s that are doing great things in the crypto community. I think this is a great, great project to look at. Everyone's always interested in price, so we'll round this video out with some price talk, but I see a lot of reasons why Ergo goes back to $20. Back when this peak right here is when Ergo grew rapidly because Ethereum went proof of stake. So when Ethereum went proof of stake, the price of Erg went up because the miners transitioned here. What I see happening is that Ergo is currently a growing ecosystem for more blockchain purists. I see that right now we're at about $2, and I do expect to get back to the $20 mark. And the reason I think about that is because of the technology kind of behind the project. I think that as the bull run continues, people will try and find smaller and smaller L1s to invest their money in, especially people who have, made money on Bitcoin and Ethereum, larger tokens that will want to transition into smaller tokens. I see them finding things like Ergo, Alephium, small things on Ergo or small projects on Cardano, other things like that. They'll find their way to Ergo, I imagine, based on the strategy of investing in smaller cap L1s. From there, as people find the project and invest more into the project, the price goes up. Now, remember, miners already know about Ergo. It's on all of the mining watch lists. It's on all the mining websites as a token to mine. Not currently really profitable to mine because of the price suppression over the bear market. As we roll into the bull market, though, and people start finding the project again and investing in the project, and we share more content like this, and people recognize what is happening on the chain, as the price creeps up into that $4 and $5 area, mining suddenly becomes a lot more profitable. Then, as mining becomes a lot more profitable, people start mining the token and then start buying and selling more of the token and start getting more interaction with the token. The token gets listed. We're currently going to be listed on ME Exchange here soon. So that's billions of dollars in volume that will be open to the Ergo ecosystem. And so the way that I see this happening is slowly price goes up and then suddenly price jumps very, very high, because as price hits a critical point around $4 or $5, mining suddenly becomes very, very profitable. And when mining becomes very, very profitable, price increases rapidly and users increase rapidly. So that is what I would be looking for. I think that is what gets us back to $20, and I'm not sure how high it goes after that. I definitely don't think every project in the crypto world can be $1 billion project. I'm not sure where Ergo goes from here. What I do know is that it's a very, very small project still. Currently, the fully diluted market cap of this project is $183 million. Now, I just told you a project about all of that technology, all of those use cases. It has the backing of Charles Hoskinson. The creators were IOHK employees. And then Alex Chipurnoy, one of the primary core developers of this project, helped found Chainlink. So for all of the Chainlink maxis who think Chainlink is going to be a big thing, you should take a look at Ergo. For all of the Cardano maxis who are very interested in Cardano and Charles Hoskinson, you should take a look at Ergo. Ergo is doing a lot of these things that people don't really recognize is happening. Much like Charles was in Bitcoin and then Ethereum, Alex Chipurnoy was probably in Ethereum or something like that, but he was in Cardano, he was in Chainlink, and now he's in Ergo, taking all those lessons and piling it together. So I think price wise, everyone thinks like price is very, very slow or very, very this. They're saying in the Cardano community too, but price will move slowly until it's not, and then it will move rapidly. And because of the miners on this specific token, the proof of work mechanism will make this thing grow incredibly fast, I think. So this is what I think about Ergo. This is the beautiful ecosystem that is Ergo. And it's one that I'm very, very kind of proud to be a core investor in. I hold Ergo. I use my wallet to hold Ergo. I use the Nautilus wallet. But Ergo is a really interesting ecosystem. It has got the DeFi that you want. It has got the technology that third generation blockchain should have. And if you are interested in ideas of Bitcoin and Cardano and kind of this cap supply, proof of work, crypto principle at the core for the retail investor, very good tokenomics. If you're interested in those things, that is what Ergo has. This is what Ergo does. And it does all those things packaged in one. So this is my Ergo video. I'm even wearing my Ergo hoodie. And I just really want to share what I love about the chain and what the technology does. So hopefully you like the video. If you are currently invested in Ergo, drop it down in the comments. Let us know. Are you invested in Ergo? Do you think Ergo is a good project? Do you think Ergo can break $20? That's what I really think. Ergo is going to get back up to that $20 range, but I would love to hear if you think it's going to go higher. Do you think it's got $20 in it, $50 in it, $100 in it? Let us know in the comments, and we will definitely talk out some price if you want. Other than that, we'll see you in the next video. Thanks for watching. Have a good weekend.